G'day folks, welcome back to another update for natural gas. Hope you had a good weekend. Today we're looking at the charts and they're all showing short positions in play. Before we're going to go any further, make sure you hit that like and subscribe button to support the channel. In terms of today, June 2nd, 2025, natural gas market and ETF outlook. Natural gas prices are projected to rise throughout 2025, driven by increased demand for US LNG export facilities. The EIA, Energy Information Administration, predicts the Henry Hub natural gas price could reach as high as $4 per million British thermal units. In terms of the ETF performance, BOIL and KLD, are leveraged ETFs tracking natural gas futures, have shown significant price movements. BOIL is currently priced at 48.71, while KLD stands at 26.69. UNG, a non-leveraged ETF, is trading at 15.71. In terms of AI demand, the rapid expansion of AI data centers is substantially increasing electricity consumption, leading to a surge in natural gas demand for power generation. Utilities are responding by planning new natural gas power plants to meet this growing energy requirement. Geopolitical events. Geopolitical tensions, including the expiration of the gas transit agreement through Ukraine, have reduced European gas supplies by 7%, intensifying reliance on LNG imports and contributing to price volatility. First, looking at the natural gas commodity price. So first looking at the monthly, weekly and daily trends, the long-term trends. We always look at that first. On the monthly here, you'll notice the price is above the moving averages, and the CCI is actually broken into that moving average band. So that's giving us a weak signal, a weakening signal. So very likely going to see a pullback towards that moving average on the monthly. So just be cautious of going long at this stage. On the weekly, it's already broken below the moving averages respectively. It's in that moving average range on the CCI, and that's also starting a bit of a downturn, weakening. And lastly, on the daily chart here, they've both broken below the moving averages, giving us a bearish signal for short positions only. This the CCI 1500 here could just smooths out the CCI 150 with a continuation of a downtrend at the moment after a couple of breaks above recently. Now, if we go to the intraday chart, we always look at the micro level, even if you're trading on the daily. We look at the micro level, and what I want you to notice is we've almost got a double bottom here on the price. It's slightly higher versus higher lows on the CCI, and that's a potential bullish divergence. And if we were to draw a Fibonacci retrace, going back to that high, you can see there it's already penetrated that 23-38% range. And that's our minimum retrace level of those divergence. So it's already hit that range. So if this starts breaking to the downside, possibly, we'll just be aware of that, because the daily is also bearish. So even though the hourly is bullish, don't take any long trade at this point. Now, what I want to highlight here as well for you is just to notice. Let's get rid of that Fibonacci. You'll notice here, if I zoom in a bit, we've got these pale pink and pale blue areas, and that they're fair value gaps. And what that means is there were orders that weren't filled, and the way they're structured basically is, let me just zoom into that one as an example. So what you do is you look at that particular candle in the middle there, and the low of that wick, the previous candle, to the high of that wick, the candle after this candle, that's called a fair value gap. Now what that means is we can expect the price at some point very likely to rise into this range and go to at least the 25 or the 50% range of that fair value gap. You can see down here we had a couple of others. This one broke right through it. And we had another fair value gap here. This wick broke right through it as well, but then it retraced back to the downside and broke through it again more recently. So we can't tell exactly when it's going to retrace into that range, but at some point we anticipate it will. You can see back here we had a few fair value gaps, and they were all penetrated from in future once they were drawn. And also notice here as well, more recently in the last few hours, we've got a couple of fair value gaps on the downside here, and we can expect the price to retrace. So it may just retrace back to about 50% level possibly, and then bounce. Again, I'm not going to tell you how to trade those today. I'm just giving you an alert or a warning that we're going to expect a bit of a pullback in the short term. But at some point, we're going to see a bounce also to the long side as well. So again, it's not something you'd be able to trade at this point, but we predominantly use our CCI 150 on the higher time frame to go short in this case. Okay. Now, if we go based on the short positioning, I'll bring up the back test, and what I've done here on the back test, I've started the stop loss approach and the average down approach. and that started from around about the 14th of May. So back here, when the price broke below, or the price broke into the moving average and the CCI broke below the moving average range, that's where you would have taken short trades. Now, again, the strategy is you only go in the direction of the higher time frame, so you would have stopped out the positions once that CCI broke into that moving average band. So you would have closed out the positions on the hourly somewhere around there. Now, the stop loss approach was about a break-even return after making a few points gain there. And the average down approach, if you closed it out there, as per the daily, that generated about 6,395. Now notice we had a few average downs there, so you've got to make sure you follow the strict rules. The other thing too is as the price was declining here below the moving averages, you would have noticed that we had a bullish divergence here, and that just would have been an alert warning, and just to be careful about going short or holding too many shorts. That actually bounced quite strongly. And again, if you drew a Fibonacci between that low and that high, you can see there it broke quite easily through that 38% range and went as high as the 61%, leveled off and sort of fluctuated around the 50 to the 61% range, finally fell off. So again, always follow the higher time frame direction of trading. So at the moment it's looking bullish on the hourly, but if you're trading the hourly, only go short. Wait for this to break to the upside if you want to go long. But if you let it run through the whole period on the back test and the stop loss approach till today, going short, the stop loss approach has generated 375. You had a bit of a drawdown there, and the average down approach has generated 18,430. Next, we're looking at BOIL. So again, looking at the long-term trends. Now, what I want you to notice here on the monthly, it's still bearish below the moving averages, but we've got a few fair value gaps back here around about 2023, and they show positions or orders haven't been filled. So again, there's no guarantee it's going to bounce up there. I'm not telling you to buy and expect it to bounce up in this area. Always follow the CCI trend and the moving average trend to start taking long positions. But at the moment, predominantly short positions to be taken. You can see there more recently that fair value gap was filled with these recent months of bullish movement. On the weekly, we did have this bullish divergence, and it's been happening now since around the start of 2023. CCI is bullish, and it's still going strong with the CCI, with the price eventually bouncing up above those moving averages. Now it's finally broken below again, and that CCI is still moving to the upside, but again, wait for the price to break above that moving average to go long on the daily if you're trading on the daily. Again, notice in there, if I zoom in, you had a few fair value gaps. They were all filled, and even that one there was filled with that recent week's activity. On the daily, we had here, it's been fluctuating in this range between these two descending diagonals, and it's still on a downside with the CCI below the moving average band. So again, just be mindful of going short only if you're trading on the lower time frame. We did have a couple of bullish divergence back here. I've covered those in the past video, so I won't cover them again. So if we go to the intraday chart, looking at the 1 hour time frame for any micro moves, and you can see there again, similar to natural gas commodity price, we've got almost a triple bottom there on the price versus slightly higher lows on the CCI. I'll mark that. So that's going to possibly bounce from there, so I'll keep an eye on that. But again, don't go long. I'm not telling you to go long. I'm just telling you that if you are holding short positions, you may want to take your profits off the table. So what else can we show you here? Yeah, there's nothing really else to look at here. Again, predominantly short positions only, and wait for this to continue to the downside on the hourly as well. Next up is KOLD. So for KOLD on the monthly, we've got a bearish momentum at the moment with the price below the moving average, and our CCI is starting to draw, but that's showing a bearish momentum as well. Notice back here, we did have a few fair value gaps. These have yet to be filled, so we might see a bit of an upswing in the coming months or even years. So again, just to be aware of that. You can see that one there has been penetrated with these candles here, and all these have been penetrated as well. This one here as well, just more recently in the last couple of months, has also been penetrated with the fair value gap being filled to about the 3/4 range. On the weekly, we've got a neutral positioning on the price in that moving average range, but the CCI is broken bullish, so somewhat bullish momentum to neutral on the weekly. On the daily, If I zoom in, we had a bullish divergence here, it bounced off that support at 1621, and it's finally hit that in the before our last video, it just touched that previous Fibonacci 23-38% range of that Fibonacci range. Again, you can see there was a fair value gap there that was filled almost a couple of days after it, and there's no fair value gap to be seen currently on the daily. On the intraday charts, again, first thing we look at is we only take long positions in accordance with the daily trend here. That's still going bullish there on the 1 hour time frame. But notice here we've had a couple of fair value gaps. So if I highlight it, say that little candle there, you would have taken the wick of that candle down to the high or the top of that candle there. That's the fair value gap for that little candle there, and that has been filled to about 3/4 of that range already. It may go higher. Sometimes all it needs to do is touch at about 1/4 to the 50% of that range. In this case, it's already gone past the 50% range, and it may start retracing back to the downside, so just be aware of that. We had another fair value gap there that bounced to about the 25% range. So they do occur quite often. There's another, that one actually wasn't because that wick would have filled the whole period. Another little gap there, and so on. So at the moment, bullish momentum on the daily, which means you take long trades only on the 1 hour time frame. Next up is UNG. So for UNG on the long-term trends, first off on the monthly, now the price is below the moving average, giving us a bearish momentum on the price movement. Although notice we've got a bullish divergence on the CCI. Let me just zoom in on this one. So the CCI is already broken above a very narrow moving average range, giving us a bullish momentum, but the price is bearish, so somewhat neutral positioning at the moment. A couple of things to notice is, number one, this bullish divergence, and what that means is if it was to hit our 23-38% minimum target range, that's where I've drawn this rectangle, this range, that's a 23-38% range. What do you notice? So that's the first thing in terms of the divergence. We may possibly see it break into there in the coming months or even years, so it's going to be a long play. But if I get rid of that divergence for a moment, one thing also I want you to notice is the fair value gap here for these two candles. So this bottom line here, and that may have been completed with that little wick breaking into that fair value gap range there. But this one up here is still in play potentially, and so is this one up here possibly. So we might see the price in the coming months or even years break to at the minimum this range up here. So just be aware of that. Notice back here we had a massive fair value gap with that spike up, and the price then broke down and went right through that 100% retrace level of that range. Going back here as well, you can see there were a few fair value gaps filled with that candle. These two back here were also filled with that downtrend, and so on. So again, they can be long plays, and I'm not telling you to go long and buy it now. I'd wait for this to break to the upside and follow the smaller time frames and trade in those directions if you're trading based on the monthly. So that's the monthly situation. Interesting outlook there. On the weekly, that's already broken below the moving average range. Likewise the CCI, so bearish momentum only if you're trading on the daily. And on the daily time frame, that's also bearish momentum, so taking short trades only, and that was a result of this bearish divergence as well. It broke right through that minimum 23-38% range and is still declining. Otherwise, the CCI and the price are moving in tangent, so there's no difference there. Now if we go to the intraday chart, see if there's any micro moves. On the first, I'm looking for any divergence, and there's no divergence that I can see. Actually, that would probably be a very small one. And sometimes these very small divergence ranges are more volatile, meaning we might see a huge bounce from here on the hourly. So just be careful about going short at this point. I'd like to see this play out on the hourly before taking any short trades based on the daily direction. So even though the weekly and the daily are showing short positions, I'd wait for this to play out because this could be a massive spike up possibly. Otherwise, if this price breaks to the downside, and also the CCI, then we're going to invalidate the divergence. So always wait for it to complete its play. Again, I'm not telling you to go long here. I'm not telling you to buy, but I'm just saying be careful about going short because this could be a bounce to the upside possibly. Again, notice here we've had a few fair value gaps. They were filled quite quickly. This one up here is another fair value gap there. That hasn't been filled yet. Neither is this. That one possibly has with that candle. These all have been filled as well. So again, we might see a bounce up here somewhere in alignment with these fair value gap bounces. So if you're new to trading, we're now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, please subscribe, and on a free trial at least, to the Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of this as sitting down with me for a coffee. Thanks, and talk to you in our next video.